Stocks had a good week. Technology, industrials, and energy sectors hit record highs recently, and that is 40% of S&P 500 by market capitalization. Junk debt and small caps could lead in the near term. Gold could retest 1900, especially if dollar gains, and crude oil has entered a new bull market. This is big news. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, September 1st, 2023. Please don't forget to hit the like button, subscribe to this channel, share this video, and make a comment. If you have anything to say or want to support this channel, your comments especially and the likes is what keeps this channel going, so please don't forget to do that. If you are a subscriber, stay tuned. We have quite a bit of stocks to cover, various ETFs, bond ETFs, foreign markets like frontier markets, for example. Some of the large cap stocks like Amgen. We'll look at complete disaster of Walgreens as well, and possible breakout through 3M, as well as many stocks in the speculative categories such as Asana, Omeros, Neogenomics, Palantir, Real, as well as some of the gold related like Eldorado Gold, Wheaton Precious Metals, etc. If you're not yet a subscriber, please consider going to MasterChartsTrading.com and sign up for one of the products. Throughout the presentation, I will be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. There's a green, blue, red, and yellow lines, which are used as support resistance lines, as well as trend identification tools. Okay, so this week we're looking right now at S&P 500. This week was a generally pretty good week. Right now we're looking at the weekly chart, so this is W. If you're using my indicators, make sure to change the settings to 52, where I'm hovering, it says 52. For daily charts, use 250. For weekly, use 52 as a setting. This week, this is the candlestick for this week right here where I'm hovering. Overall, it's a decent looking candle. It's green body. The close was ideally it should have been a little bit further higher, like for example this candle from the 26th of June, but we had some selling at the end of the week, so there is a small shadow sticking out of the top. Right here on the July 24th candle, July 24th, right there, July 24th candle, or Thursday, July 27th is recent 52-week highs. So overall, clearly this security S&P 500 is in an uptrend, and we were approaching this 52-week high. So last week we ended right there, Friday 25th of August. And basically, it could have gone either way. We could have gone down, could have gone up. Looks like we're going up. We're very close to 52-week highs. I think if new 52-week highs are made, then the shorts, the people who are thinking that stock market will, go down, usually they put their stops above previous highs. So if we see a new high, we will see what's called a short squeeze. So we'll make a new high, and a few people will, throw in the towel and say, okay, no more, I cannot hold this short anymore. And then by extension, that means that they need to buy. If you close your short or you cover your short, that means you're buying an open market. And as you're buying an open market, then you are, there's more demand, and prices usually gonna continue higher. So a short squeeze could unfold, especially if we make this new 52-week high, which is not that far. I mean, we're so close. We're like 2% away from 52-week highs. If we make 52-week highs, then record highs are super close as well. There are the record highs. Record highs are mere 6% away. This is for S&P 500. So we're obviously in a bull market. Obviously, we're in an uptrend. If we make new all-time highs, all-time records, so I already pointed this out. This is a potential giant cup and just maybe cup formation. So I'm just gonna look at it like that. And the depth of this pattern, and I'm talking about right here, so the depth, it's defined by the high from January 2022, the low from October 2022, and a potential new all-time high that we may make in the next few weeks to possibly month. The depth of this pattern is about 1,000 to 1,300 points. So if we break out to new record highs, then it's quite reasonable to expect a move of similar magnitude, which would put S&P 500 somewhere in the vicinity of 6,000. So it's, people say they have different projections. This is a bullish projection. It's a pretty optimistic bullish projection. I think it's very reasonable. I'm not saying it's going to happen, immediately. Obviously, there's going to be some sort of a back and forth, but you can see that from low in October 2022 until now, that was, how many weeks was that? That was 46 weeks. So a little bit less than a year, and we moved. Let me see how much we moved. We moved 31%. So can we move another 30% once we break to new records over another 46 weeks? Yeah, absolutely. So if that's the case, let's be a little bit less optimistic. Let's make it 52 weeks, so like a year. So that would put us somewhere in August 2024. That's provided we break out, within the next few weeks, basically, to new records. Can this happen? I think yes. What do you guys think? If you have an opinion, please make a comment. I would like to start a discussion, definitely. To prove my point that it is indeed possible that, this rosy scenario could happen, currently we're looking at XLE, energy ETF. So when I get to oil, I will also show that oil is breaking into new uptrend. But for now, let's just look at this chart here. So energy XLE, and I put down here percentages of S&P 500 sector weighting. How much of each sector is present within S&P 500. So energy is not a big sector. It's a little bit over 4%. So XLE energy. And it just closed at all-time high, all right? Not a 52-week high. You have to understand that this is an all-time high, all right? This is we've never been here before, okay? So we haven't yet hit an actual all-time high. Actual all-time high happened here on November 2022, but this is a closing all-time high. So to make a record high would not take a lot of energy, pun intended. So this is obviously good news. Can this continue higher? Absolutely. And this is a very bullish pattern, in my opinion. So this is a bullish pattern. It's kind of like inverted whatever. And the way you project the price is you go possibly this pattern right here. That's a 20% depth of this pattern. So can we break to new records and continue higher? Yeah, that's about $15 move. Can we get to like 106? We're currently at 90. That's another 17% higher from today's prices. Sure, absolutely, yeah. And especially, like I just said, oil is breaking into a new uptrend, and I will get to oil in a few minutes, and I will show that this is obviously good for energy stocks. So oil, energy constitutes 4.1% of S&P 500, is now hitting 52-week highs. All-time highs. So all-time highs for energy. We're currently looking at industrials, XLI. Okay, this is also an all-time high. We've never been here before. All right, so some sectors hit records or all-time records before others. Okay, we cannot predict which one will hit, the records before the other ones. But industrials is a relatively volatile sector, and we can call it what's called an offensive sector. It's not a defensive sector. It's not like, consumer staples or utilities, things of that nature. No, industrials, it has pretty volatile stocks. And notice that we also just hit an all-time high here in July of this year. Very recent all-time highs. Industrials constitute 8.6%. Together with energy is about 12.7% so far of the S&P 500. And of course, here's the technology sector, XLK, also just hit very recently all-time high. This is a record high for technology, and technology is an enormous sector. It's 28% of S&P 500. So together we got S&P 500 technology, we got industrials and energy, and that's close to 40% of the large cap S&P 500 stock market. If this even two of this, actually three of the sectors, all of the above that I just mentioned, energy, industrials, and technology, what I could consider offensive sectors. Not defensive sectors for sure. It's not like healthcare, or it's not like consumer staples or utilities. Yeah, definitely technology is an offensive sector. It's volatile. It has high beta stocks, and it's not something that it's not a defensive sector. So together, what I'm trying to say is that yes, some of the sectors have not yet hit record highs. For example, SOX, Semiconductor index. No, it hasn't hit an all-time records. Yeah, we're very close. Okay, but can we expect, like I said, can we expect all of the sectors to hit records at once? I don't think so. So I think it's good news in general that we have offensive sectors hitting record highs, and I think we should just wait and see until, especially financials are very important, to get up there, and consumer discretionary. So XLY has not yet, and it's kind of dragging pretty badly, XLY, consumer discretionary, but it's in an uptrend. Yeah, we broke out into a new uptrend. Notice this above the blue line right here, so that means it's not an uptrend. It's also at 52-week highs, let me just see which one I wanted to highlight as well. So financials, right? XLF, financials, also kind of dragging its feet, but also in an uptrend. We're above this blue line. To me, this is all I really needed to know, whether or not we're in an uptrend, if the security has closed above my blue support resistance line. So let's wait a little bit. Let's not panic. Yes, we have some sectors that are dragging, but big ones, technology and industrials and energy, are now at all-time highs or close to them, or just hit them. So I think it's we just need to kind of chill out and wait for the rest of the market to catch up. So I wanted to now show junk debt, high yield bonds. This is JNK. JNK is important to the health of the stock market because of the correlations. So let's look at the correlations, and down below here I have what's called a correlation coefficient. So correlation coefficient means how, on average, about do the two securities, in this case S&P 500, this is a correlation to S&P 500. So it's junk debt correlation to S&P 500. Yes, it's definitely very high correlation. It's mostly positive, occasionally it's negative, but overall it's quite positive. So and junk debt high yield bonds also just hit 52-week highs. So it's definitely an uptrend. It's definitely moving higher, and it just hit 52-week highs. So when junk debt actually made fresh high, yes, it's not all-time high, but it's junk that just made a 52-week high before S&P 500. Okay, S&P 500 has not yet made a high above this July 27th high, while junk that indeed just did that. It's above the 27th of July highs. So this is a bullish divergence, and it's, in my mind, it's a good thing. Right now we have high yield bonds are leading stock market higher. Okay, this is 52-week highs right here for high yield bonds. I think this is a good thing again, and another reason why I think this is good is because high yield bonds, many of the companies, of course not all, but many of the companies that are within this high yield bonds ETF are also happen to be in a small cap category. So that's why I wanted to look at small caps, IWM, because IWM is a small caps index, and if high yield bonds are leading the stocks higher, and it's right now, notice that small caps have not yet made a new high above the July previous highs. So again, this is a bullish divergence. I think since junk debt is moving higher before stocks, it's, in my mind, this is a good thing. I think it's a positive development. I think stocks will now tend to catch up towards the high yield bonds. So I am actually personally long. I bought small caps right there at blue line. So my technique to buy stocks normally is to have, for example, if it already broke out above the blue support resistance line, like it did here back in February of this year, then I simply buy on pullback. And so the latest pullback occurred right there on 31st of July, made a high and now pulled back. I bought on close back above the blue line. You can find out more about the lines by following the link in the description. So my target was actually not that far. My target was just hit today. And at this point, I moved my stop to entry. So I bought it, 186.08 right here around the blue line. Now I moved my stop to entry. So if we do get a pullback, I'll just get stopped out at no loss. But there is now a good chance it will continue higher, and I will just keep trailing higher once we get there. So to reiterate, small caps and junk debt, especially with junk debt, to me this is a good news that is leading the market higher, and we will expect, I think, new highs, at least 52-week highs, but possibly even all-time highs in the near term. Let's move on to dollar and its relationship with gold. So here's dollar DXY. So dollar kind of broke to 52-week lows and then went on a tear, just a huge rally. So let's look at a weekly chart first. There it is. So we have 7 weeks straight higher. I mean, this is definitely getting overextended. I mean, it does happen on occasion, but straight, 7 weeks of green candles don't happen that often. So last week I was saying that maybe we have topped. I was looking at this price action here, right there, on the 25th of August, and then again on the 29th of August. I thought that we have topped, but yesterday and today's candles on the first 1st of September and 31st of August basically negated all of this, and we ended up having a pretty positive candle. This is a good looking, at least definitely not bearish candle. This is like possibly a hanging man, but maybe it's tapping, but it's not like a really terrible candle. So I think it's quite reasonable for dollar to continue at least a little bit higher towards this red line. So currently dollar is about 1%, 1 point away from the red line, and I think at that point we should be looking for a tapping or for a tapping pattern similar to what we had, for example, here in January and again back in March. So what happens is we have a high above the red line, like a high or a close above the red line, and then a close below it. And this is where I would open a short position. So we're very close to that level. Maybe even next week we'll hit that level. However, if dollar appreciates, gold will come under pressure, and here's why. Gold is traded in US dollars, so gold divided by US dollar. If the bottom part of this equation, US dollar, gets bigger, it will pull this currency pair lower. Okay, so for the past few days, we had a dollar depreciating, and gold took advantage of that. We had a very large, or rather very important level at 1900, where previously we found support right there. Around July, and this is my blue line again. So again, we found support there and moved higher. Now today's candle is not exactly what I want to see. This is a potential shooting star candlestick. So like I said, if dollar continues to push higher, then gold will come under pressure and may retest this blue line level again. So this level is hugely important. Ideally it should hold there, but even if it doesn't and kind of breaks through that level, the even more important level is to avoid breaking below 1784, where I'm hovering. This red line, so 1784 is a bear market for gold. If dollar continues higher, I mean significantly higher towards this blue line, that would imply like another 5% move for the dollar, then gold will most likely collapse back into a bear market. And this has happened in the past. Obviously, gold has been in a bear market before. We're looking right now at the weekly chart of gold. So there's, below the red line, those are the bear markets for gold. The latest one occurred between May 2022 and it ended here in January of this year, 2023. Overall, this is a huge, basically sideways action that started back in August 2020, with neither the bulls nor the bears really taking any sort of decisive action. But if we make new records, if we break out, let's say above 2050 or so, previous highs, then we could make a large move for gold. So depth of this pattern is around 400 points or so, maybe even 500 points, 430 points. Gold could move towards 2500. This is all provided dollar does not strengthen or definitely weakens. So looking ahead, there is some significant volatility, I think, in the next few weeks. I should be watching for gold and dollar interplay. And let's wrap up today with oil. CL1 exclamation point on TradingView.com. This is TradingView.com interface. So if you listen to my previous videos, back in March, April, May, I was watching this price action, noticed this attempt to break below like $66, $65, $63. They all failed. There were multiple real attempts to get below it, and they all failed. Finally, we had a rally that began in earnest in late June and kind of ended right there in August of August 10th. Now we had a small pullback, but notice what just happened yesterday on the 31st of August. Notice that the price has indeed closed above the blue support resistance line. And in my mind, this means a new bull market for oil. Okay, new bull market for oil, or new uptrend. Okay, so this means that now we're not looking for lower prices for oil, we're looking for higher prices for oil. Where can it go? Well, I think in the low hundreds is a very reasonable target. Right now we're at around 85, so this is a light crude oil United States mark, but Brent is very similar. So I think oil could easily continue higher from here. What are the reasons for this? Could be demand is going to increase, which is ideal situation. I think if we have a demand increase, that means the economy worldwide is growing, and people want to see that. The much worst case scenario is that it is supply disruptions, as in, for example, due to war in Ukraine and around Black Sea. That is also possible. So we're looking at possibility of both, maybe a demand increase, but I think bigger thing is a supply disruption. So the bottom line is that we are, I would be long oil right now for a move towards like 100s into $100 area. And as I pointed out, energy XLE. We actually already sent out alerts back in June. Notice up arrows. In fact, another one was sent on June 30th because it was already, showing signs of resilience. It was not dropping. So if you are a long XLE energy ETF, then you are up 11%. This is actually all-time closing high that occurred today. So I think we could see a substantial move higher for oil companies. Is that a good thing or a bad thing? What do you guys think? Make a comment. Don't forget to hit the like button, subscribe to this channel, head over to MasterChartsTrading.com, click on sign up. I have 3 products, or rather 2 products and 1 bundle. So the trading indicators are these lines in the chart. As for example, we traded energy ETF XLE, which is simply buy and close above the blue line. These lines are available for this interface, tradingview.com. Okay, tradingview.com. You can pretty much trade anything under the sun, including forex, gold, cryptocurrencies as well. I have a newsletter that I send out daily. We look at various securities. For example, this week we will look at a whole bunch of various small cap, what I call speculative stocks, like Cloudflare, Neogenomics, Mattel. I mean, it's not a small cap, but it's sort of speculative. Spotify also, we looked at that. So some of the speculative stocks and some of the large caps and ETFs. So for example, Coca-Cola, 3M. 3M is looking interesting. So if you're interested in that, sign up on my site. And you can get those indicators and newsletters. And I think the best deal, of course, is to get both newsletters and indicators at $59.95 per month. I think it's a great deal. So do sign up for that. Again, thank you for watching until the end. I appreciate what you're doing, and don't forget again to hit the like button, subscribe to this channel, share this video, and make a comment. Thank you for watching, and have another great trading week. Bye bye.